What's up, traders? Anthony Crudele here, and thank you for tuning in to the Futures Radio Show podcast. Very interesting show for you guys today. Brought back my good friend and favorite macro trader, Yra Harris. Got Ira's reaction to today's FOMC statement and Fed Chair Powell's conference following the statement. Then we talked about Tudor Jones' comments from earlier in the week. And then we got into China. And this was very interesting to me. Ira believes that China is the story right now that traders should be focusing on. Then later in the show, we went to the charts. We looked at gold, silver, 5-year, 30-year, NASDAQ, a little bit of copper, the dollar, that, and a whole lot more. Futures Radio Show is sponsored by CME Group. And in July, micro WTI futures are coming to CME. They'll be 1/10 the size of the benchmark WTI futures and will provide traders with a new tool to fine-tune their exposure to crude oil markets and enhance their trading strategies in an efficient, more precise way. To learn more, go to activetrader.cmegroup.com. Futures Radio Show is also sponsored by Trading Technologies, TradeStation, and FTSE Russell. The Russell 2000 is a key benchmark for small-cap U.S. stocks. Be sure to check out the E-mini Russell 2000 future symbol RTY and micro E-mini Russell 2000 future symbol M2K. To learn more about FTSE Russell and their products, please visit FTSERussell.com. So, Ira, today we had the Fed meeting. I want to get into the recap with you. That's important. But listening to you talk lately, reading some of the posts that you've been putting out, this Fed meeting was important. The Fed is always important. And you and I are going to go to the charts in a little bit here, and we're going to go over some of the impact that we saw from today's FOMC meeting and what impacts it had on the markets. So I want to start off with just what you thought what the Fed did today and what Powell had talked about in his speech. There's a few things I thought that were pretty interesting in there, some funny parts as well. But and then I want to get into really where you believe the big story is China. And you believe the big story is China. And actually, I want you to talk about how when Tudor Jones earlier this week was talking about whether inflation is transitory and how he said that this is a very important meeting for the Fed. And we heard that whole discussion on CNBC. Like I said, all of you out there, if you haven't watched it, I've already done a show on this earlier in the week. I think you need to see it. And Ira you have some thoughts on why he should be mentioning China and the yuan, because that's really the big story. That's even the bigger story than what the Fed is talking about with inflation. You feel that is what traders really need to be watching. So let's just start off today and just give us a quick recap of what you thought about today's Fed meeting.
Well, I thought it went exactly as I discussed this morning with Pax's room. They tweaked the reverse repo and the IOER, and that was because they want to end. They don't want the headlines about the fear of the money market funds breaking into negative territory. So they wanted to put an end to that because it's really causing havoc with the amount of funds sloshing around the system, especially because what they didn't do, they didn't announce any plans to talking about cutting the QE. And the fact that Peter Bookfire have been banging the table, and I think rightfully so. Okay, you want to buy treasuries, fine. Well, why are you buying mortgage-backed securities, $40 billion a month? So there's no cut to that, because that's wreaking havoc on the housing market, by the way, sending housing prices much higher, and that's been their point. So there was no discussion of that. So that was a bunch of tweaks, but the way the algos and such will pick it up is that, well, the Fed was hawkish. I listened to it. I don't believe, I don't even look at the dot plots. I haven't, I think they're a joke.
Total
even
joke.
Talks about that they really don't have any meaning and that forecasters need to be much more humble. He said that today in the press conference, that they have a lot to be humble about because their track record is very poor. So why do I even care about them? Those who are lazy care about them because it gives you an easy picture.
They're for the media.
They are. For, me. Anthony. What I really believe I always bring to the discussion is nuance and context, and the dot plots have absolutely no nuance and context. And it's for people who don't want nuance. They just, oh, that's what they think. Well, what's their track record? Well, I'll tell you what, if they were offering bets, if they were a betting service, they'd been out of business long ago. But I thought the tweaks were important because it signified that they are concerned. And Lori Logan, who's the head of the System Open Market account, the SOMA, evidently got her way, in my opinion, totally my opinion, and said, hey, we got to do something to tweak this issue with overnight funds. So they did that. But outside of that, I thought it was, business as usual and pretty dovish.
Always great hearing your thoughts on it. I mean, I thought similar, and I want to go back to the Paul Tudor Jones from earlier in the week.
But I offer one caveat. Right now, the market's telling me I'm wrong. I'm wrong. Because they want to believe this was more hawkish. I'm looking at the metals as we're talking right now, and the gold is on its lows. It's down to 1827 right now. So it's had a sizable break from the pit, what we call the pit close. It's down $34. So they're seeing this as more, okay. So I certainly respect that. I lost a few dollars trading the gold. I waited because I was looking for this. So I thought they'd break the gold. I didn't think it would be able to sustain this break, but they're evidently seeing more. So I respect it and we'll go with it. But the yield curve, 530 especially, flattened dramatically.
Yeah, we'll go to the charts here, everybody, when we take a break and come back a little bit later in the show. But I really want to stay on, I think, just the initial reaction to today's Fed meeting. And earlier in the week, Paul Tudor Jones on CNBC said this is probably the most important FOMC meeting. I told everybody, if you haven't watched this, go and watch it. He goes and talks about how he believes that the Fed needs to start addressing the fact that inflation is not transitory, and he doesn't see it the world that way. And he felt that commodities would be an interesting place to look because he said that I thought this was an interesting stat. I didn't know this. $88 trillion of money is being managed by money managers. And only 670 billion of it, and I know you remember that comment he said about it, was in commodities. So he said that there was a big short there. I mean, basically saying that, there's just not enough people, that they're not putting enough into commodities out of that 88 trillion. I don't think he was talking about it in the sense of like a bunch of people were short. So he said they could double or triple from here. And what I'm curious is, do you feel that, first of all, what are your thoughts on his comments? Like I mentioned at the beginning that you said you're surprised he didn't address China. You still think that's the bigger story. But getting to today's Fed meeting, did they do anything to make his concern? Did they do anything to address what Paul Tudor Jones said this past week?
Well, that would be a question I would ask Paul Tudor Jones. And if I was sitting in that news conference today, I would have, and I didn't hear the question, maybe somebody else did, I would have asked Bernanke directly, Powell directly about Tudor Jones' concern. I mean, that's
fair. I agree.
Point,
I
right?
think it is, sure.
This is no lightweight.
No, no.
This is somebody has impact in the markets, which is why CNBC, of course, had him on when they did. And that should have been a question. Is Paul Tudor Jones right? My interest in Paul Tudor Jones was that Paul talked about, and Sorkin danced him around with Reddit and what he would do. And, and I understand what that means, as you do, Anthony, because he's a momentum.
Sure.
Future, right?
Absolutely.
That's not all he is, but he certainly understands the power of that. And that's what he was alluding to, that we're underinvested. And then if we really use leverage and get this going, commodities are way underpriced. But the biggest player is China. And China has been the biggest. China has lifted. If you put up a Bloomberg Commodity Index, a BCOM on CQG, if you put up a monthly, you'd be amazed at what you would see. And a year ago, we were making lows down at 58 and 59. Today, let's see, let me give you we closed at 93.41. So we've bounced off of last year's lows due to COVID of, a little more than a year ago now. We've bounced almost 50% off the lows. I hate using those extremes, but if you look at a chart, we're at 93. If you go back to 2008 for that same index, now 2008 was certainly a problem year, right? Anybody remember 2000?
I kind of remember that year.
Yeah, me too. So in July of 2008, would you care? Now that was in the height. Well, October of 2008, we get Lehman, right? So prior to Lehman, and this was after Bear Stearns, so the Fed was getting very aggressive. The Bloomberg Commodity Index, which is now sitting at 93.44, was in July of 2008, it made its all-time highs at 238. Want me to say it again? 238. So Paul Tudor Jones, we're trading roughly, 35% of that, 36% in commodities. And then it came crashing down, and then we rallied. And then then the Fed, even at the QE, it couldn't rally. Now we're very looking interesting. So, Paul is right. And what does that represent? Is that people are way underinvested, but the Chinese are not underinvested. And I believe everything you've seen so far from crude oil, I don't like this index because it's too heavily weighted, but so does Goldman Sachs in the energy sector. Because if you use the Goldman Sachs, whatever you want to use. Let me put that up. You can run these for everybody. Let's see if I can get that up. Oh, shoot.
And while you're pulling up that chart, I just want to quickly say, people say to me, well, why do I care about what Paul Tudor Jones says, or why should I? He's on there, he's probably talking his book and whatever. I mean, that's what everybody does on TV anyway. Yeah, but he's got a commodities background. And I want to hear what he thinks about commodities. I mean, that's what we do, right? And when you've got a guy like him out there talking that way, you pay attention to it. Don't pay attention to a lot of people, but he's one that I do pay attention to. And just hearing him speak the way that he did, it's not often you hear someone like him come on TV and say it's a green light to be all in the inflation trades and talking about commodities. Now, once again, right, wrong, I don't know. I look at it like this: as a trader, that could be a market mover, and I also want to hear a guy's thoughts like that. And from talking to you, what I think is the most interesting thing, and you really opened my eyes to this, and I just didn't see it, is and how important China really is in this, and why Paul should have really been addressing them, because for them, they're buying a lot of these commodities. They're driving the price up with the movement in the yuan, as you've talked about, how that's been going up, and they've been buying a lot of these commodities. And to me, I feel like that's really just a bigger issue almost than the Fed. I mean, the Fed matters for definitely some things that we're going to talk about later when we look at the charts. I mean, we're talking about market-wise here. Obviously, the Fed matters. I'm not saying that at all, but I'm saying specifically for inflation, some of the things we're looking at in the commodity space, this is really more of is driven by China, is what you're saying.
But, and if you're going to take that, well, why should I listen to Paul Tudor Jones? He's just talking his book. Okay.
Yeah.
Okay. You can be that cynical, but then you better not read or look at anything, because whatever you're going to read, unless it's from Ira Harris, because I'm not selling you anything, is somebody trying to sell you something.
Exactly.
Paul Tudor Jones isn't selling you anything, because you can't get into his fund. So he really doesn't care, and you're not really going to help him anyway. My 10, 20, 30 lots are not going to make a difference. Now, yes, if it's 10,000 Ira Harris's, yeah, it makes a difference. But he's not selling you, and he doesn't, you're as he would tell you, he doesn't want you piggybacking him. He's discussing ideas, and it took, it was to really prompt Robinhood, which is the charity foundation that he started to really help, especially inner city youth in New York and Harlem. And so and he's got to be able to sell something good. Yeah, he's selling something. He's selling ideas, but people aren't going to pay that ticket to go to a Robinhood function if the content is crap. So take off your cynic's hat and maybe listen a little bit. You might learn. So sometimes some people's opinions are worth more than others. Is really.
Oh, that goes for sure. So I want to stay on this with China right now and why you believe this is such an important role in everything that's happening right now, because this is one of those things where I'll read your posts, I'll hear you talk, and it's like, I get it. I kind of get it, right? And eventually, all of a sudden, there's these light bulbs go off, and I go, I understand why he's saying this now. And I just want you to really walk this back for everybody and explain to them why China right now really is, what's happening there is the story, and what happens with them, and really determining whether inflation is transitory or not, and all this.
I agree with you. And that's, again, if this thesis is right, and I think there's a lot of credibility to it, because other people have written about it for years that this was going to take place. The Fed, the ECB, the Bank of Japan is a different story. Japan has been a different story for many reasons. But the ECB, Bank of Canada, Bank of England, they've all been talking about how they haven't been able to hit their inflation targets, which a lot of people who are analysts who I respect laugh at anyway. Paul Volcker laughed at it. He thought it was a ridiculous concept. And I have great respect for Volcker. But a lot, it's like those who sit on CNBC, where's the inflation? Where's the inflation? Well, for 25 years, China has kept a lid on global inflation, because the way capitalism works, when you do all this CapEx, capital expenditure, you bring all this capacity online. You brought 1 billion workers. Let's go back to 1989 with the fall of the Berlin Wall. Things start in motion. All of a sudden, all these workers who were being suppressed and crushed in all these nations were now starting to be unleashed. Well, money followed, basically arbitraged wages. So you had money move into, China was a later story, but we certainly went into the Asian tigers, Eastern European nations. They were following money was following the cheap labor. That's why capital has been so richly rewarded over the last 32, 33, 34 years. Hugely. The rewards, everybody who writes about it, talks about that the wages. I would tell you that was responsible for Trump and maybe other things that'll take care. Because the middle has said, we've been squeezed and squeezed and squeezed, okay? But it was squeezed because of because money flowing to China, Chinese workers coming from the hinterlands into the factories, the manufacturing the massive goods, exporting them around the world and keeping downward pressure on all types of manufactured goods. That was deflationary, no matter, or disinflationary, or whatever word we can be precise. It kept pressure on what we consider to be inflation. That's why I never had any for the Phillips curve. Even when I was in graduate school, I said there's no global component to it. It's a domestic measure. Well, that's kind of silly when money, especially, is running around the world looking to arbitrage wages. So China exporting that massive amount of goods, you going to Walmart and being able to pick up that or that IKEA, you're buying cheaper goods. You're putting pressure on anybody else who's manufacturing goods. But if China turns it, meaning that instead of exporting 65% of what they produce, they start only exporting 45, 50% and consuming, or maybe even more. Now the downward pressure on global wages and rates dissipates. And not only that means that they've reached a point of per capita income that the Chinese people are consuming more. Chinese people are consuming more. That means they're consuming more beef, more soybeans, more protein, more corn, more wheat, more coffee, everything. So where they were a push downward, they are now that will be changed. And I think we saw it in food prices over the last 2 years, because we had, and that was my point, we saw record crops. So there is no bottleneck in food markets. There's no bottleneck. Yes, there was the swine flu, but today they're talking about that they have such massive amounts of pork, that they're going to stop importing it. So you saw August hogs were limited down today. But they're going to play with everybody because China will always ensure that they have enough food, because lack of food in China is a serious thing. There will never be. They have, as when I would lecture at different universities over the years, and there were a lot of Chinese students in the classes, we would sit and have discussions that China bent the demand curve, global demand curve for food. And now it's really coming to fruition and what tells me that is, if I'm right, and you're going to import more because you need more, well, you want a stronger currency.
Yep. Right?
Because it doesn't make any sense. You want a stronger currency. And over this whole period, which very few people have paid attention to, the yuan over the last year, and I'm talking exactly a year, has rallied 14%.
That's big.
Into a slowing economy, which is diametrically opposed to what all the theoreticians thought, that China would do everything to protect its share of global trade. Didn't happen. So that's what put me onto it. And again, I will argue with those who will say, well, prices are transitory up because of bottlenecks, because of, all the shutdowns. But you can't say that about raw material prices like food. Iron ore, there's as much iron ore, somebody's been buying it. Copper, there's no shortage of copper. Somebody's been stockpiling the hell out of it. And that's in an economy that was slow and on its knees, right?
It's so interesting to me. I have to say, you're the only person I've really heard talk about this in that kind of detail, and it really is an eye-opener. And what it makes me think is how much power does the Fed really have in controlling this if they think inflation is transitory? I mean, getting back to what you talked about and said that you were kind of disappointed that Tudor Jones didn't address this, because to me, this is not something the Fed really can do much about. Am I wrong?
Well, they can do something about it. They can raise rates higher. No, don't laugh. I mean, that's a policy response. I don't think it's a stable policy response, but I think it's a policy response. Will they go there? Not with this Treasury, not with this administration.
No way.
Trump either.
No chance.
A political statement, but they're not going. And if you raised rates, the cost of financing this massive deficit that you're building up in the United States goes, if you raise rates high enough to do that, that goes up exponentially. So actually the Chinese are actually brilliant by doing this, because they know you're not going to do that.
Yeah.
They know. Who just raised rates? Russia. Russia raised rates. It's the marginal economies that are raising rates because they see some of this taking place, price rising, and they want to get out ahead of it. The Fed, forget about it. Not happening. Sorry.
Yep. No, you're right. Okay, what I want to do now is I want to pause for 45 seconds, everybody. When I come back, Ira, what I want to do with you is I want to pull up a bunch of charts. Today, the 530 is something that we're going to start off by talking about. You said that was the number one thing you got from a market moving perspective today. Then we'll look at gold, copper, dollar, and a few other things. So hang tight, traders. We'll be back in 45 seconds.
Yep.
Replace your exchange with TradeStation Crypto. Dealing with multiple exchanges is complicated and it takes time, except with TradeStation Crypto. Because we are not an exchange, we are a broker. You have access to multiple pools of liquidity, all in one platform, in one account, one way. Trade crypto your way, plus earn interest on your eligible cryptocurrencies. Get started in one click.
Trade the global markets with Trading Technologies. TT is the world's fastest commercially available futures trading platform, now with integrated tools for advanced options trading, cryptocurrencies, and trade surveillance. Learn more at tradingtechnologies.com. Welcome back, traders. I now have the charts up. If you're listening to this on audio only, I will upload these charts in the post on anthonycrudele.com, or you can go and check us out on YouTube. Ira, first I pulled up a 5-minute, 5-year, a 5-minute, 30-year chart. I don't have the 530 up here, but I wanted to pull up both of these markets. They both had decent moves, but the 530 is what you said was really very interesting to you. So talk to us about what you saw after the Fed announcement today.
Well, I thought this would happen with the Fed announcement, with the tweaking of the overnight to affect what we call the plumbing of the market, especially the interest rate markets on the short case. That if they did this, and they did both, they raised the repo rate, reverse repo, 5 from 0 to 5, and they raised the interest on excess reserves from 10 basis points to 15, so that the market would then see there won't be that flood of money, and that they might interpret it as a tightening. I don't think that it's a tightening. I think it's just a plumbing issue. But if that's the case, that they would move to start to tighten. Now, some people will talk about the dot plots. I find those to be honestly boring and ridiculous, except if they move the markets, I got to pay attention to them. So you did see a monster move, 10 basis points on the 530. Now, interestingly, the 210 actually steepened at the same time. They beat the hell out of the 10, because that, to me, the 5s and 10s, it's the belly of the curve that was the most vulnerable, and the market deemed the most overpriced on this type of action. So that's what we saw. But the 30 has held in there really pretty well.
It
has really gotten beat up. And if you had the 530 on, I had a few on, so it was a good trade. And I was able to pick up. I'll be out of it by the end of the day. But it was an interesting move, and it made perfect sense in regard to that.
And I pulled it up on the daily, and I got the 5-year on the daily on the left, and then the moving averages, everybody, are the magenta is the 200-day, the red is the 10-day, and the green is the 50-day. And I just pulling these up, and I just want to, just get to some bigger picture perspective. Both of these moves actually, well, the 5-year potentially took it out of this recent uptrend. The 30-year stayed within trend. What do you see going forward from these markets?
I don't know, because again, so much of this is what I would consider algo driven. They read the headlines, and then there's the reaction. And again, there's a lot of people who I would need to see in the bond market who aren't there. What most people fail to realize and fail to remember is that the Fed doesn't hedge its book. So the Fed is carrying a massive book, $7 trillion. Fed doesn't hedge. If 2 or 3 trillion of that was in pension funds and insurance companies and individual investors, there'd be a lot of hedging against the inflation risk, but there is none. So I don't know. This is a hard read here. If the Fed, the metals right now are telling me the market is deeming the Fed to be very hawkish. The metals are getting the hell beat out of them right now. Gold's down $50.
Yeah, let's pull up gold now. I actually just pulled up gold on the 5-minute on the left, and I'm going to pull up silver.
So right now, the market, it's reading this as the Fed hawkish.
Yes.
I respect that. Oh, fine. I bought gold on the initial break, took a few dollar loser. I'll be back at it, but right now, the market's saying, hey, we think they're serious. I don't see it, but my opinion is just that, an opinion, and it's not worth pursuing here because the market's telling me it's not worth pursuing. So I'll see what develops here. The dollar's rallied. So you've had things that say, hey, this is hawkish. The most hawkish part about it was the movement in the belly of the curve in the 5 and 10, and probably even to the 3 to the 10. So you've gotten a lift there. Rates have jumped pretty dramatically. And so the market's taking its read off of that. The algos are reading that. Go ahead, be on your way. Equity markets,
we'll get to equities in a second. I want to stay on gold real quick because here's the one thing when I look at Gold, I got stopped out of it today. Again, this gold has been a torture chamber for me this year.
Yeah.
I'll be perfectly honest with you. I mean, beginning of the year, I was making money with it, and then just getting completely chopped up. It's funny. Lately, I went on a decent run with it, made some money, keep trading around a core position, got stopped out of everything again today. And I'm just like, you know what? It's got me to the point where I'm just getting tired of buying it. So it's probably ready. You know, I mean, I look at it and go, it's like running on the treadmill, but not getting any of the athletic results. But at least I'm not losing on it now because I bought the dip pretty good last time. No, once again, this is not about me and my trading, but when I look at it right now, I go, it's now taking out all these moving averages again, which I like to see how it is within trend. But what I find so interesting is that exactly what you said. I think that's the important piece and component to take away from today, because, you know, I am somebody who I'm very technical, but I have to watch the Fed days. I don't really trade them. Today was, like I said, swing positions. I got stopped out in gold. Okay. But when I look at it, I say the Fed changed the trend again. And this is important. Right, wrong, and different, I don't know. I mean, I looked at it and said I didn't think it was going to be that big of a deal to gold, and gold just kept down ticking. I'm like, they're going to get me out. And so I guess when, you know, I look at you and I say, is this really, are the gold people right or wrong? Is it not really something you would look at it that way? But I'm just curious what your thoughts on this.
You know what? I believe that the gold will be right, but to me, it's a trade. I'm not locking up with it. I keep a core cash position because that's just, I've been in for so long that I go to bed at night and hope that gold goes back to $400. I do, because the world would be a better place.
Yeah.
I'm not a gold bug, but as I will cynically say, I'm not a fiat currency bug either. I trade what I see in the world and the policy that reflects it. Now, today the gold is reacting out that. And as you say, Anthony, gold has been a very tough trade because it's caught between this, you know, especially for gold to go up even while the equity markets are performing so well, right? Because usually when the equity markets are good, why would you want to be in gold at all? Much better returns in the equity markets, and they pay you a dividend. And so there's a lot more to it, but yet they both went up together because they were both looking at the Fed and going, well, they're just pumping liquidity, so I got to have a little of this and a little of that. Because even Tudor said, what did he say? Buy 5% of your portfolio in gold.
Yeah, he did.
He said that Monday.
Yeah, I know.
He said that Monday. Now, they've just given you certainly a better opportunity. But, you know, for the year, gold, down? I'm looking at probably right.
I took gold off. You know, I'm just, you know, once again, I look at it and say, what I find interesting is that I don't want to say the weak hands, but it's interesting to me when I watch Fed days. I used to trade them a lot more actively. I don't really now. I come into the day with swing positions. I don't even modify them. I just basically, you know, whatever happens. I have my stops in, or I look for potential opportunities to get in. I actually tweeted about this morning, and I said, you and I agree on this. We've talked about this a lot. I use the Fed days as great entry points because if the market overshoots, and I think it's basically a nothing thing that they were talking about, in the market overshoots in one direction or another, then I like that as an opportunity to get in. And that's why I was asking you what you thought about gold, because I'm like, now I'm out again. And I'm looking at it going, did I just get out, or is this the entry? On my stuff, it's not getting me in. But I think that right now, we got to wait another day or two to see what happens here. I mean, just to see what gold does in general. And I kind of mentioned weak hands. I just think that everyone was a lot like me going, okay, if gold's going to go, this is the point it's going to start going. And it didn't. And so maybe it was the weak hand shakeout. Maybe it sets back up. But anyway, I want to move on to some other markets. And I pulled up the dollar. Did you want to say something about gold?
Even gold bugs who I know, I'm getting text right now as we're talking. Worthless position. This is someone who is very knowledgeable about gold. But they're trading it wrong. You're not supposed to. Right now, it's caught in a range. Trade the range. And it's trading so nicely against, you know, I use it as a relative trade, especially against currencies. So I'm not locking up with it. Go do what you want to do. Okay.
Well, here's what I look at it, and I want to say, you know, this last time around, I traded it better, and I actually talked about this in the recent podcast, is that you can't press gold. You can't press gold on highs.
No. Nope.
If the fact that I'm trading it small now and I wait for the kind of the blowout bottoms to really set up and I get in late after they've already bottomed out, which I do in most of my trading anyway, it's been much better for me. Still not really getting anywhere with it, but that's for a different discussion, a different day. I want to go ahead.
But you're learning its characteristics.
Yes, that's the truth.
The market has characteristics.
100%, absolutely. This is why we always say you learn by losing. I mean, and it's been like I said, it's been frustrating for me, and I feel like I've been trading it really well. You think I look back and go, man, and then I just added a couple times on highs, but once again, we'll wait for the next opportunity for. I'll talk about gold, of course, in upcoming shows. But I want to go to the Nasdaq, and I pulled up the dollar here. I look at the Nasdaq's move today was really nothing. I mean, very muted. I mean, it went down to, what did it go down to? The 10-day moving average? Big deal.
Yeah.
And the dollar rallied. And the dollar rallied pretty good. Another thing kind of supporting that the Fed took this as hawkish, right? Right, Ira, or no?
No, it did. And the dollar still, okay, we're making lows right now in the euro as we talk. So everything's going out. Oh, we're in the last minute, so everything's going out on its lows. Very nice.
Yeah, there's euro. I pulled that up.
So yes, the market right now is taking hawkish, but still the euro, okay, we're at 120, still pretty good because interest rates in Europe really didn't move much after that. I watched the Bund and French oats are still open, so up until 3 o'clock Chicago time. So I mean, nothing was really disastrous. Let's see what the United States. Let's see what the differential on the German. Yeah.
While you're looking for that, I mean, you know what I look for, and maybe we'll go to some markets here and see if anything like this is set up. But while you're looking for that, I'm thinking about what markets broke trend today, or what markets got more aggressive within trend. And the only thing I really saw that broke trend with the stuff that I look at was the 5-year. I mean, that broke trend to the upside. Aside from that, I look at it and go, yeah, maybe the euro got hit a little bit harder. I think when I look at this now, I'm not really trading that, but I didn't see that. Like I said, nothing else really got outside of trend. Did you find the set you were looking for?
Yeah. Well, the differential on the Bund to the U.S. 10-year. So we're at 172 this morning. We're probably at 182.83 right now, 183. So the dollar's rallying because you had a widening out of the yield differential, and especially because people are short dollars. They're in a short dollar position right now.
Yeah.
Because Tudor threw the gauntlet down, so people, and they're late to it, but okay.
Yeah. So, like I said, going back to what I was looking for today, I mean, I'm not in Bitcoin right now either. I have some stuff I've been holding, but I even look at that. I look at that on the daily. It broke a little bit. Nothing really there. I'll pull up ETH here for a second, which I do have a pretty big position on an ETH.
And also, you can never forget, and your listeners can never forget, the job of the market is to cause as much pain and aggravation to as many people as possible on a daily basis.
It's what it is. I know. It's just absolutely. And
that's his job.
Yeah.
And I mean that. I
know. ETH actually held up pretty well. Once again, it's another just a range-bound market. It hasn't done much. What should we be looking at? What other markets do you think I should be looking at on a day like this before we close out today? I'm just curious if anything really changed from today. I mean, a lot of times I do really think that that's one of the most important things I take away from a Fed meeting or a big announcement, especially after Tudor Jones was talking about this as being a big Fed announcement. What broke technical trend? Where was there confirmation that it believed that what the Fed said and it's going to have actual impact for money-making opportunities?
Well, copper's reversal day is a problem because it was up. It was trying to rally this morning and then failed.
Let's go to copper. Yeah. And that extended, that's one of those where it was breaking out to the down, or breaking down to the downside, not breaking out, but pulling back. And that got accelerated a little bit.
Right. And it looked like it was going to turn around. And so today, you know what? They're going to run with this. The interesting thing is, who's going to ask Tudor Jones the question about, did the Fed do enough today? Yeah,
that's why I asked you. I was thinking about that. I'm like, did this solve it? I mean, I'd like to hear back from him and see what he says about it.
Right.
You know, I don't know, but that's why we play this game called trading, Ira. But
No, but you have to pay attention to that because that's. But see, CNBC puts that out. Where's the follow? They should have
exactly.
Should have had him on live. Is this enough? Is it you foamed the runway, so to speak?
No.
Yeah,
Exactly.
because if okay, you opened up your mouth, you delivered this view, and now why aren't you telling us? Well, yeah, they did enough today. Are you saying that? I don't know. But if he turns around and in 45 minutes we get a headline, hey, you know what? No, I don't think well, how much are you? But more importantly, how much are you buying? I don't care what your opinion is.
Well, he said all in green light, right?
Yeah, because I know that the Chinese are waiting, and they're going to wait. And again, they're not going to let you front run them. Not going to happen. So right now, they're not. Why should I step into the market? If I was the Chinese, I'd put my feet up. I'd smoke a big Havana cigar. Hey, prices are coming down. I know I need more, but I'm not going to tell you. So you know what? You keep selling and go do the work for me. And that's what the market's going to do.
No, you're right. Absolutely. I mean, and anytime you have to buy a lot, you don't let anybody know about it. And you wait till things look pretty ugly, and then you slowly step in and you buy when people are selling. I mean, that's the thing is when you're a big buyer of anything, you want to have people selling. You need to have people selling, just like when you want to be a seller of something.
And Anthony, and the algos drive so much of this. They're driving, and they're not caring. Right now, if you are extricating a position, that's the thing about robots and artificial intelligence. When they get into trading mode, they're not set for price. Boom, 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 boom. I got liquidation to do. I'm liquidating.
Yeah.
Right? I'm set in motion, and I'm setting into other automatic systems. So right now, today, you are seeing, we saw massive selling in the metals. Silver got down to 26.70. So silver's had almost a $1.30 range today. What? On a 5 pip move in interest rates, which was actually housekeeping and not any type of significant move. And don't tell me about the dot plots. I don't want to hear it. 2023 is so far away for anybody in our business.
Oh,
please.
Exactly.
Please.
Silver actually to me just looks super range bound. It's not a market I trade. As bad as I've been trading gold lately, I can't imagine how bad I'd probably be trading silver. That market is just always been tough for me.
It's a tough market. It's a tough market because number one, it has more, where gold has much more of a currency and a safe haven asset. Silver is an industrial metal, and yet it finally moved with copper. It took it a long time. In fact, one of my favorite charts is the copper silver chart, which I watch. And we're trying this week to get a breakout of the 200-week moving average. And all that is a mean reversion.
Yeah.
But it struggled with it, so I'm keeping my eye on it. And again, I have a theory also about when the Chinese go to a central bank digital currency, as we're now coming to call them, that theirs will be backed by precious metal. Just another one of my theories. But when Singapore built a 15,000-ton warehouse specifically for silver next to the Singapore airport last year, I pay attention.
You have to pay attention to something like that.
These are users. These are people. And that's why I was really kind of surprised that Paul didn't talk about China and its role and his view on commodities. Because I think that is a very significant, as we've talked about. And everybody will now, they'll all talk about the Fed as the Fed hawkish, and everybody will forget about everything, which is fine. That's what makes this such a great business to make it to to trade and invest in because people's heads get turned so easily.
Yeah, no, you're right. And Ira, I gotta say, thank you once again for opening my eyes to things that I just know I would not have figured out without you. I mean, I'd be perfectly honest about that. There's just some things out there that, as traders, and as much as we look at the market, we're not really seeing what's really happening. And you've opened my eyes to so many things over the years, you know that. But thank you again. And when are you going to get back to writing more? I wanted to talk about the blog, but you haven't been blogging much.
Well, I try to do one a week. It's a lot of work, and yet there's not really much changing. So when I see big things like that Spiegel column the other day, and then these are worth discussing because this will move the needle. And I've blogged quite a bit about my views on this China situation.
Yeah,
I was hoping to do that podcast with Michael Pettis. I was really looking forward to it. It was, I had gone back into my books because they're all highlighted out. I've read his stuff, read 3 or 4 of his books. I've read so many of his journal articles. He's one of my favorites. Not that I always agree with him, but he's got a pretty good view, and he's been sitting in China for quite a long time, and I think has a good handle on it. And I've been doing a lot of reading. This is a time, because to me the markets, I'm invested in the way that I am. My trading, I've cut down my trading quite a bit right now. I caught the dollar down. I had a very nice year, and I've been back and forth like you. It's been ebb and flow this year.
Oh, no doubt. I mean, I've cut back my trading a substantial amount because I just, I'm not getting anywhere. My best trade so far this year, I've talked about this on the show a lot, has been in Ethereum. I know you're not trading the crypto stuff, but I saw that and I did really well on that. And, I've been doing very little everywhere else. I'm trading oil a little bit lately. That's been kind of good for me. But when it's grinding up the way it is, actually, we didn't talk about oil today, but, look at, we always have to adjust to what the environment is and how much we think we can take out of it and not give too much back. I mean, that's really sometimes comes down to the simple truth of, look at, I just go back to gold. I've been trading gold smaller because of what I did earlier in the year, burning a hole in my pocket. This time around, I've been getting small as quick as I can. I've been actually using the micros for it to stay with some futures or options. And it's just such a relief because like today I'm going, I got stopped out, still made a little bit of money. Okay, move on. Before I was getting aggressive on the highs thinking things were going to happen and they weren't. And so, you smarten up.
You made money on the long side today. That's a great trade.
Yeah. Well, I mean, it's been a swing I've been in for a couple of weeks, but I mean, in general, overall, I'm out now. I like getting in with these. If they go my way, just keep getting small, find a day to get back in, cover by the end of the day, keep small position, and so on and so forth. But Ira, this was great.
That's why I pay attention to what the Fed does, because it's good. Today was a perfect opportunity because I use it for a low risk entry point relative to where it was this morning. I got in $35 lower, all based on, and then it went another $20 lower, but I was out. So I used that, but my entry point was a point I was comfortable with, and I was able to cut my losses by 90%.
Yeah.
That's what I strive to do, because had it turned around and reacted in a way that I thought was right, then I would have had a 90% increase in my profits.
Yeah.
So,
no. All right, my friend. Thank you so much for coming on the show today. I appreciate it as always.
You know what? One last thing before coming out of the Fed. Usually I have copious notes when Powell speaks. Here's my notes for the day. I mean, I fill pages when any Fed. This is ridiculous. And I started writing. And he cherry picked. He said, well, lumber prices are coming down. Used car prices are coming down. And those are, so he cherry picked it.
Yep.
And I said, oh, is this what this conference is going to be about? Nobody's going to push him on it? That's what we're talking about. And as Peter Bookvar texted me or sent me an email, not one word about housing prices. Nobody asked a question about the great run up in housing prices.
Not. I know. Well, a lot of questions out there, and I'll be tuning into your blog when you are writing. And thank you again, my friend. I appreciate it. Stay cool out there in Arizona. Don't melt on me.
Great work you're doing. Yeah, I'm going to try.
All right, I'll talk to you soon.
Okay.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a 5-star review on iTunes. Never miss an episode. Go to anthonycrudele.com and get on our email list for show notifications and for free content that is exclusively for subscribers. Also on anthonycrudele.com, you will find tons of videos and education on trading futures, options, and crypto. Past performance is not indicative of future results. Opinions expressed are solely my own and my guests, and they do not express the views or opinions of my sponsors. Futures Radio Show is produced by Crudele Productions.